Can you see this setup? Everything you are looking at was planned before the trade happened. And today I will show you how exactly I built this idea from the higher time frame all the way to the CRT entry setup. This is not just luck, it is what it is planned, it is time-based. So I'm going to be showing you how you can build this setup right from what from planned area to what to the entry area. So in this video, you are going to be learning how I build my market bias, how I use higher time frames, why timing matters more than what more than price. I've always expatiated on my video that are time over price, time over price. And in this video, I'm going to be showing exactly why your time supersedes your price. I'm going to be showing you also in this video how CRT forms, the psychology behind the CRT forming, how you see it on the higher time frame, how it's going to look at on a lower time frame, and I'm going to be showing you how I execute high profitable trade in this video. If this is what you have been looking for, then stay to the end of this video because I'm going to be unveiling everything you need to know about CRT for you. So looking at the CRT now, the first and foremost, if you want to trade the CRT, what you need to do is what you need to start from your higher time frame. So you can all see that what I'm starting from my what from my higher time frame, which is my I'm starting from my higher time frame. As a trader, you need to work with what with three higher time frame. You can see this is my 4 hours time frame. This is volatility 75. So art is also to show you that CRT work on synthetic indices. It is not just on what on forex pair or indices, it works on any asset you want to think of. So this is volatility 75. You can see I'm on what? I'm on higher time frame. On my higher time frame, this is my CRT. This is my CRT in the sense that I did not just mark a random candle. I did not just mark this CRT. This as my CRT candle. This is the high of my CRT and this is the low of my CRT. I did not just mark this candle as my CRT. Look at what happened. This is my what? This is my CRT candle and I actually want to trade the what? The 1 a.m. CRT candle. You know, we have what? We have 159. The 1 a.m. CRT candle, the 5 a.m. CRT candle, and the 9 a.m. CRT candle. So on this particular day, I was trading the what? The 1 a.m. CRT candle. So on my daily time frame, I've actually seen the what? The logic behind it. On the 4 hours time frame, I mark this as my what? As my identified CRT. And this is what I want to be trading for. So another thing that I use in marking the CRT now after I've marked my CRT, then I brought out my what? My Fibonacci just to measure the what? The range of the what? Of the CRT candle. And as at the time I was trading, which was my 1 a.m. CRT candle, you can see I measured the what? The range of the what? Of the CRT candle. So these are also part of the tools you use in what? In framing high probability setup, your Fibonacci retracement. So you can see all I had was my what? My 50%, my 61.8%, my 78%, and that's how the levels I have. So I marked that. You can see my CRT high, my CRT low. So at the time I was taking this, which was what? Which was 7:15, 7:13 p.m. in my time, Nigerian time. That was exactly like 1 a.m. in EST time. That was 1 a.m. EST time. So once I measure my ratio, as at that time, I know I wanted to trade the 1 a.m. CRT candle. And the 1 a.m. CRT candle, ranges from what? From 1 to what? To 4. So as at the time I was in the market, this was around 1 a.m. already. So we are going to 2. So since I just measured it out, this is the time, this is where price was currently as at the time I was doing my analysis. So I saw the price there. I took out my Fibonacci, measured the range of this last candle. Measure the range of this last candle. So this last candle now, it closed what? Now another thing you need to put into consideration is your what? Is your psychology behind every candlestick, your open high low. So in determining your CRT candle, we don't just use random candles, we use candles. So another thing that we consider is the what? Is the open high low close. So those are the things we consider in the what? So those are the things we consider in framing our what? Our CRT candle. So we don't just pick a random candle. We consider the what? So the open high, low, close. So on this particular candle now, this is a bearish candle. So since look at this bearish candle now, if you look at the open of this candle, this was the open and it closed back. So it closed inside the range of my CRT candle. So I expect that the next candle should be a bullish candle. The next candle should be a bullish candle. There's no doubt about it. So the psychology of every candle is that for a bullish candle now, I expect it to open. Once it open, it should what? It should trade down, right? It open, I expect what? To trade down to give me the low before manipulating to the upside, before expanding to the upside. So since I know that, my mind was at rest, and at the time I was coming into the market. So I just what? I just needed to wait for the right time before entering the market. So I just need to wait for the right time. So that was why I pick out my Fibonacci to measure the range of the last candle that I have, which is this bearish candle. So I expect in this situation, I expect 50% retracement of the previous candle. So I mark out my 50% here. You can see. So I was looking at this area. So since I marked that out. So the next thing I went down to my To my 1 hour time frame. You can see I'm playing my value from 4 hours time frame. I mark out the CRT, I mark out the range of the previous candle, then I went down to my To my 1 hour time frame. So on my 1 hour time frame, I look at my Fibonacci very well. Now on my 1 hour time frame, I could actually see the real price action there. So look at the candle. This is the candle that opened, that was trading, that was 715. So I expect the candle to look at now. The first candle here, we have this engulfing candle. So long this candle engulf this candle, I know we've changed we've changed from a bearish trend to an uptrend. So we have another block. So automatically this becomes an order block. So I mark out the open with this green line, the open of the order block. I mark it out. Then I look at the next candle. The next candle it closed at but this candle now, this candle already closed above this. So I knew this was my CRT. You can see this angle liquidity. You can see this angle liquidity. So I knew they were going to what? To take out this liquidity first. So this is the short time liquidity, and overall, if I'm working with daily time, I can give you the long time liquidity. But at the current time, the 1 year CFD candle, this is what I expect them to do, to take out this short time liquidity. So on my 1 hour time frame, I could see the lower time frame price analysis that I needed. So I went down from my 1 hour time frame. You can see I removed my Fibonacci. I've seen what I want to see. I have where I'm looking at. I'm just waiting for the perfect time. I know where my price is going from, but I'm waiting for the perfect time for my entry. So you can see what I was saying. So this is the order block. This is another block. So I mark the open, which is this candle. Then above the open, I have my true day open price. These are the things you don't play with. ICT, we talk about true day open price. This is the thing you don't. So in this situation, if you are buying, buy below the true day open price. If you are selling, sell above true day open price. So if I want to buy this market, I know I cannot buy because price is above the true day open price. So I was waiting for a retracement, and don't forget that I was waiting for 50% retracement of my previous 4 hours bearish candle. So the 50%, there is no way it's coming down to this area here. So this is the 50%. This is where I mark as the 50%. So above the 50%, I have the other block, the open of the other block. You can see the alignment I have. Then I have the 2-day open above. So I mean they were going to touch this 50% retracement. So from there, you can see, so I already marked it. I went back to my 4 hours time frame. I look at the structure as everything is aligning.
So, guys, this is where we'll be stopping in part one. I know we have not covered much, but I don't want to rush the video because I want you to learn everything right from how it forms to how you take your entry. So, if you have learned something in video, please like it, comment, and drop what in the comment section part two, and I will upload the concluding part. See you.